Hi there, the topic which I'm going to talk about is one of the most intriguing topic if you are a day trader or a short-term trader, and I'm talking about the concept of intraday trading. And through this video we'll also try to understand the rules and requisites if you want to be a successful and a profitable intraday trader. So before moving on to the rules and requisites, let us understand what exactly is an intraday trader. So an intraday trading or intraday trader is an individual who tries to finish the transaction within the same day. When I say finish the transaction, I mean buying and selling activity has to be completed within the same day to be called as an intraday trade, and the person who does that is called an intraday trader. Now the most important thing about trading in the cash market while intraday trading is that it allows you to sell before and buy later. Normally if you are trading cash market shares and you want to hold it over a period of time, you can only buy it and hold it over a period of time. But if you are an intraday trader, you can sell first, and if you feel weakness is there in the market, ride on the weakness and make gains by buying at a lower price. So that is one of the most important and one of the most distinguishing factors of an intraday trading. Now let us jump and understand few of the thumb rules of the intraday trading. The first rule which I always follow is always choose liquid stocks. Now why is it important? Supposedly you buy something and you want to exit, but if there is no one willing to sell it at that time, which means there is no liquidity, you'll be stuck with positions. Even though the position might go in your favor, but you can't exit your positions. So always choose liquid stocks, and liquidity becomes even a bigger factor if the position goes against you. Normally what happens, if the position goes against you, you want to exit as soon as possible at the least amount of loss. But if there is no liquidity in the market, how will you exit? You need someone to be willing to buy at a lower price for you to be able to get out of your position. So which is why it is important for us to choose a liquid stock. The next important rule is pre-decide your entry and exit points. Now this is very important. When you are an intraday trader, always have a set rule for yourself. Don't enter a trade just because you want to enter a trade. Before entering at a price, always decide this is the point at which I will exit if the trade goes against me, and this is my likely target for a trade. So pre-deciding your entry and exit points makes it a clear thought process, and you're not wondering about what to do with the position once the position you have entered in the market either goes in your favor or against it. Always decide beforehand that this is my plan for a trade, this is my likely stop loss for a trade, and this is my likely profit zone for the trade. The third important rule of intraday trading is always keep a stop loss for a trade. This is the most important thing. Even if sometimes you might not have a profit target for yourself, but always have a stop loss decided. Don't enter a trade if you don't have a stop loss plan or an exit plan if it goes against you. I'll give you a simple example. If supposedly you have bought certain shares at say 100 rupees, now what to do with it? What is the most important thing here is this: always know what is my stop loss or contingency plan. Supposedly you do a research and find out that 98 is a point beyond which it shouldn't fall for the trade to be right. So as soon as the market breaks 98 on the downside and the trade goes against you, exit from the market. Don't wait for the market to come back and then I'll see what to do. No, exit when the stop loss is hit. Sometimes you might not have a profit target. You might be willing to trade the trending market. It's okay not to have a profit target, but always have a stop loss ready. Have a mindset of a trader, not an investor. Now normally what happens, a lot of people do intraday trading and they just think it as an investment. Okay, if it goes against me, I'll hold and see what happens. That is the most deadly form of problem which any trader faces if they're doing intraday trading, because you can't be having a mindset of an investor. You need to be sharp and you need to be very focused if you're doing intraday trader, because if you become an investor by being an intraday trader, you're bound to keep averaging and you never know when the trade comes in your favor. Just to give you a simple example, supposedly if you have bought something for say 10 rupees and you don't have a stop loss for it and it goes down to say 6 rupees and then it falls a little more and say comes down to rupees 5. So which is a fall of 50% from 10 to 5. But to go back from 5 to 10, it's a climb of 100%. So you understand the effort it takes to make the money back. So that is the thing I'm talking about. Don't become an investor if you're an intraday trader. Think as like a trader, have a short profit targets, have a short stop losses. Either of them is hit, get out of the trade and think fresh and wait for the next trade to come. And the most important and the last rule for intraday trading is never trade against the trend. Against the trend trading might work or normally works if you're an investor, but if you're a trader, if you're trading against the market, 9 out of 10 times you're likely to lose money from the market. So don't have the mentality of trading against the trend and just look for mean reversion trades. You don't have to look for it. Go with the momentum, go with the flow. If the market looks like it's coming down, start looking for shorting opportunities. And if the market looks like it's going up for a day, start looking for buying opportunities and scalp accordingly. So don't trade against the trend if you are a intraday trader. So these are the 5 rules which we have discussed. The first is always trade liquid stock. The second is pre-decide your entry and exit points. The third point, always have your stop loss ready. Fourth point, have a mindset of a trader, not an investor. And the fifth important point is that never trade against that trend. If you follow these 5 thumb rules, you're bound to have a successful and profitable day trading career. Now before moving on, if you're looking to open a Demat account, we recommend you try the platform of Alice Blue. It is a cutting edge technology platform with absolutely no lag in the orders, and the website is very easy to navigate. Now if you go to the website, you get to see all the features which they provide, like a trade store, best margins which they have. They have a mobile web application called the Ant Technology, Trade School, Ant Plus. They have different trading tools like margin calculator, option calculator, daily pivot point calculators, brokerage calculators. All the important ingredients which are required for trading purpose are available there. And if you go to the pricing, you get to see the pricing for different kind of derivative instrument and the cash instrument. The brokerage which they charge right now is, for equity intraday, they are charging rupees 15 per order or 0.1%, whichever is lower amongst the two. Delivery is absolutely cost free. This is actually very important. If you're taking your stocks for delivery purpose, it's absolutely costless. Futures and options are again charged at 15 rupees per order. In the MCX, that is the commodity segment, they're charging 15 rupees per order for futures and 15 rupees per order for options trading. Similarly, for currency futures and currency options, they're charging 15 rupees per order, both for futures and options. Another important benefit which they have come up for the users is the Alice Blue referral. If you refer your friends, you get 500 rupees as an incentive plus 10% brokerage cashback for 30 days. Plus 10% lifetime commission, basically as and when your friend does any transactions. You get 10% off their brokerage as a benefit for yourself, and you have 10% brokerage cashback for next 30 days. So this is actually a very important feature which is provided to its users. And importantly, their Demat account is free to open. There is no charge which they charge for any of their users to open a Demat account, which makes it very interactive and reliable for their users to use. And so please open an account at Alice Blue and make benefit of the technology which they provided. They are one of the leading stockbrokers in the country, and with the growing number of stockbroking account, they are bound to be one of the top players in the country in times to come. Now, having understood the rules, let us understand what the requisites or requirement of intraday trading. The first is have a good trading account. Don't have a trading account just because the trading account provides you something at a cheap price. No, don't look out for on that rational. Look out for trading account which is actually reliable, has a very strong name, and doesn't have lag in the execution of trade. Sometimes what happens when a lot of trades flow in the system, your server is not able to take the load and your trade is stuck in the market. So have a good and a reliable trading account. Second is one needs to have sufficient margin. This is important because intraday trading normally works on a system of leverage, and you do intraday trading because you want to expose an amount of capital, and if the trade goes in your favor, you want to maximize the potential. So have a decent amount of margin in a trading account. Secondly, choose the right asset types. Normally what happens if you are trading in the stock market, the index becomes an important criteria. If the index is going up, then choose the assets which are contributing towards the growth of the index for that particular day. Choose the right asset for the intraday trading purpose. Now this is very important. I'll give you a simple scenario. If supposedly index is going up for a day, now it's important for you to find out what are the assets in the index which are contributing towards the market going up. Supposedly if there are say 7, 8, 10 sectors which are contributing in the movement of index, and if the index is going up, so find out those index which are major contributors for the market going up and trade in that asset class. And after selecting the particular asset class, choose the right stock within that asset class. Now supposedly if the market is going up and Bank Nifty is a major contributor to it. Now if you, and as we are all aware that Bank Nifty has 12 banks which are the part of the Sensex. So it is important for us to find out those important banks within those 12 banks also who are contributing for the movement of the index, and then trade those things. So the first is have sufficient margin. Then the next point is choose the right asset class, and the third point is choose the right stock within that asset class. The fourth point is always check your order book. Now this actually might sound not such a big factor, but sometimes what happens when the market is very volatile and you place the order, because of some lag in your internet connection or on the server of the broker, the order doesn't go through and you might be stuck with the wrong positions unknowingly also. So as in when you place an order, always go back to your order book and check whether the order is placed or not. The next important point, and the most important point also, continuously keep monitoring your positions. This is actually one thing which a lot of people don't do. They just enter a trade, leave a stop loss and profit target and just leave the screen, but that is not good. Just to put things into perspective, supposedly if you have bought the shares of XYZ company at 100 rupees, you have a profit target of 105 and your stop loss is 98. Now what happens? The market is going in your favor and the market goes to say 104 rupees 50 paisa, and you see a lot of tussle between buyers and sellers. There's a lot of selling pressure coming in. If you're not on the screen, the market might come back down and you might be stuck with a position which was in your profit, but because you are not on the screen, the market has come back to your entry price. But if you're on your screen, you see the price action, you might think, okay, it's better to exit at 104.5 rather than waiting for 105 to come. So monitoring a position becomes very important. So these are the 5 important golden thumb rules and 6 requirements if you want to be a trader. I hope you like the content, and if you like our content, please comment, like and subscribe, and please don't forget to press the bell notification. We publish good and educative content on regular basis. I thank you for your patient hearing. I'll again see you in future videos of financial education. Thank you so much.